Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the US budget bill has now been approved by Congress, setting up a big shift in fortunes for big business at the expense of those on low incomes, and handing their future generations a substantially larger deficit headache. In fact, one so large it will impact the global economy. In the US, they're about to have another national public holiday, Independence Day, so there's been an early data dump there in advance. US non-farm payrolls expanded by 147,000 in June, very similar to the May expansion, and better than the expected 110,000. The variance from yesterday's ADP employment report will raise a few questions. Average weekly earnings went down in June from May, but were up 3.4% from a year ago. In May, that annual gain was 3.8%, so this metric is tightening. Month-on-month decreases have happened before, but they're relatively infrequent and usually indicate overtime earnings are drying up. US initial jobless claims came in at 231,500 last week, and similar to what was expected, taking the continuing claims level to 1.91 million, 90,000 higher than year-ago levels. These two labour market reports probably take pressure off the Fed to cut their policy rate at the next review at the very end of this month. US exports fell 4% in May, whereas imports dipped a minus 0.1%. That saw their trade deficit rise from the prior month, but stay considerably lower than the same month a year ago. US services exports dipped in the month, but locally the June ISM service sector PMI improved from its tiny May decline to a small June expansion. The S&P Global Market Services PMI told a similar story, but both noted the rising cost worries. May American factory order levels were up sharply from April to be 3.2% higher than year-ago levels, but aircraft orders drove the rise, and without that, the year-on-year gain was just 0.2%, far less than can be accounted for by inflation. Even the month-on-month gain without aircraft wasn't significant, but at least it was a gain. And Trump's boast that it'll do 90 deals in 90 days resulting from its tariff pressure looks like it'll fall completely flat. The US has announced one with Vietnam, but the Vietnamese will only say they're still working through the details. The talks on all others are dragging on inconclusively. In Canada, their export and import data for May was little changed overall, but in fact that hides some pretty significant shifts. Their trade with the US fell a lot, and they now have the smallest share going to the US since 1997, 28 years ago. In short order, Canadians have managed to reorient their trade to others successfully. Across the Pacific, analysts had expected the Caixin Services PMI for China to maintain its small but steady expansion, but it weakened. Not a lot, but it's still expanding, but it will be disconcerting all the same. And it is now at a 9-month low. And surprising analysts who had expected a $5 billion monthly trade surplus, the actual Australian surplus for May came in at half that level, to its lowest level in 5 years. May exports fell faster, down 2.7% from April, while May imports rose faster, up 3.8% from April. Interestingly, exports of gold are down 3.4% in May from a year ago, and that is in Aussie dollar terms, not volume. Container freight rates fell 5.7% last week from the prior week to be 45% lower than year-ago levels. Trans-Pacific rates fell 15% as the trade war crimps these supply chains. Bulk freight rates fell 13% in the past week and are now 33% lower than year-ago levels. The US Treasury 10-year yield is now at 4.34% and up 5 basis points from yesterday. And the price of gold will start today at $3,326 an ounce, down $20 from yesterday. American oil prices little changed at just under $67 a barrel, while the international Brent price is down 50 cents at just over $68.50 a barrel. Last week's North American rig counts took an unusually sharp dip. There is certainly no evidence yet that investors are piling in to drill more aggressively. The Kiwi dollar is now just under 60.7 US cents, down 10 basis points from yesterday. Against the Aussie, we're down 20 basis points at 92.3 Australian cents. against the euro were unchanged at 51.6 euro cents. That all means our trade weight index starts today at just over 68 and down 10 basis points from yesterday. And the Bitcoin price starts today at $109,173 and up 0.5% from yesterday. Volatility over the past 24 hours has been low at just over plus or minus 0.8%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.